What's going on, guys? Welcome back to the Theta Club YouTube channel. I'm just going to be going over in this video on how the portfolio did in the past week. As you guys can see, I made $100 or just under 3%. Basically, the whole strategy for the week was just me selling cash secured puts for Workhorse. Just the premise behind was that Workhorse had some pretty good premiums, and I wouldn't mind getting assigned to have to buy another 100 shares of Workhorse. I have held shares of Workhorse in the past and made some money off of it. That was just kind of my ideology behind it, and with the USPS contract being likely announced soon, I think Workhorse would be the front runner for that contract. If Workhorse does get announced that they would get the $8 billion contract with such a small market cap, that would likely increase their stock price pretty drastically. So I wouldn't mind getting shares at $23.50 when Workhorse right now is at $25. That was kind of what I did throughout the week. I just kept selling cash secured puts. Every time my contract would run out of money, I would just open up a new one, and it just consistently rose throughout the week. So I was able to get in 3 contracts, and that led to me making the $100. The one that I opened for now next Friday, which will expire a week from today, then should make me about $83 as long as Workhorse doesn't drop below the $23.50 strike price. So that's just kind of the whole premise behind what I'm just going to be rinsing and repeating, just because I'm not going to be playing TNA for the moment, just because I don't want to have to add more money into the account with TNA trading at about $50 per share. I'd need about $5,000 in the account, or just under, if I wanted to sell cash secured puts just to afford the collateral. You have to be able to buy 100 shares of the security if it does drop below your strike price. So at the $23.50, if Workhorse does drop below that by next Friday, I'll be assigned to buy them, which would cost me $2,350. So I'm not playing with my entire account. Another thing I want to be talking about, so when I started making the videos, the account size was a little bit over 3,100, and now we have grown it to over 3,500. So in that time period, the rate of return has been about 10%, or just under 10% now. I just wanted to show you guys like the power of compounding your investment about over the course of time, how much something like 10% even in just about 3 weeks can really add up. So I brought up a rate of return calculator, and I just want to show you guys the power of how making small rate of return over the course of something like 40 years could really add up, leave you pretty set for when you're going to retire. So me being at 20 years old, I entered in some numbers here. So with a starting amount of $20,000, if you did not contribute anything for the next 45 years, if you return an average of 10% over the next 45 years, so from 20 to 65, which is the retirement age in the United States, that $20,000 will turn into $1.4 million over the course of the next 45 years without making any contributions to the account, whether that be monthly, weekly, or yearly. Having consistent gains like something like 10%. 10% has been the average return of the S&P 500. In my portfolio, I've returned 10% in the past 3 weeks. And, and that's something that's not practical, that will happen all the time. Obviously, some years are better than others, but say if you were able to get this average yearly return up to something like 20%, that grows the account size quite a bit. As you can see now, from 10% to 20%, the ending balance grows to $73 million just off of a small $20,000 investment, not even adding anything to the account over time. So as you can see, it'll really pay to try and outperform the market if you can. Obviously, it won't happen all the time. It's not something that most people can consistently do. So if you can even return something like 12%, that grows your portfolio size by the time you retire from $1.4 million to something like $3 million. If you're able to outperform the market, it's just really going to pay you over the course of a long run, even if you're not adding money consistently to your account. If you wanted to even say add $200 to the account every month with the 12% return, that makes your portfolio size $6.7 million by the time you're 65 if you were 20 years old at this time. So that just shows you the power of investing and how important it is to try and make consistent gains. As an investor or a trader, you're not looking to try and double your portfolio every day or every couple of weeks. It's just not practical, and you're going to end up losing out on more money just because you're trying to use this as a get-rich-quick scheme, which is not what the stock market is about at all. It's more of a get-rich over a long course period of time, and if you just stay consistent with it, it'll likely happen, and it'll set you up pretty nicely by the time you retire. That's all I have for you guys. Check out the link in the description below if you don't already have a Robinhood account. That's what I use to trade in the videos that you guys are watching. If you open up one with the link in the description, then you'll get a free stock. Other than that, guys, have a great day, and thank you so much for watching.